Hello, and thanks for joining us here on Phillip Capital Market Watch. I'm Wei Ren, Technical Analyst at Phillip Securities Research. Today, I'll be sharing on what lies ahead for the Dow Jones Industrial Average, its macro outlook, as well as its technical analysis. Major market news last week has been gloomy, and despite major US stock averages rebounded on 20th August 2021, it struggled to return to positive of the week amid fears of the Federal Reserve pulling back its stimulus. Looking at the major index, the Dow Jones Industrial Average gained 225.96 points, or nearly 0.7% to 35,120.08. The S&P 500 added 0.8% to reach 4,441.67. And the tech-heavy Nasdaq Composite rose about 1.2% to 14,714.66. The COVID-19 Delta variant and inflation remain the key issue for the Federal Reserve as retail sales and University of Michigan consumer sentiment suffered the most. The upcoming speech by Federal Reserve Chairman Jerome Powell at Jackson Hole is likely to reveal more details on the tapering date and process. On this slide, briefly, the divergence between the Fed fund rate and asset purchase suggests low interest rate may linger for a while. We think that tapering is unlikely this quarter as employment is still far short of 6 million jobs to be filled, compared to the strong employment before the pandemic. And in addition, with the threat posed by the Delta variant, it will likely push the Fed to announce the details in October and start its tapering process by December 2021. However, reverse repo has started, whereby the Federal Reserve has been soaking up excess liquidity from the markets. The 5-year forward inflation forecast appeared to have priced out rate hikes soon, while the Fed fund rate target remained low. Should the Fed cut rate now, this will severely limit its room to cut rates further. To a lesser extent, its reverse repurchases are soaking up liquidity from the open market. However, this has not tamed inflation, but only add to the confusions. Jobs remain the key worry for the Federal Reserve when it comes to the decision of when to taper. While the tapering may come sooner than expected, but with consumer sentiment falling, employment rates still fall short of 3.9% and retail sales falling. Hence, the Fed's hands are really tight. The 2-year 10-year spread briefly inverted last year at zero line. Looking at the yield curve, we will see a broad-based market recession should the yield curve spread spikes up. We should be concerned as there may be an inverse relationship between the yield and the market, and this clearly resemble the phenomenon happened in 2008 and 2009 period during the Lehman Brothers crisis. Let's look at the Dow Jones Industrial Average super cycle wave count from 1986 to 2008 from a larger picture. The 22-year period from 1986 to 2008 represents the super cycle wave count of wave 1 to 2. The corrective wave 2 is represented by an expanded flat of the corrective flat. And from 1986 to 2008, after that, from 2008 to present day, it shows that despite the fear of the tapering process, the Elliott wave count suggests that the final wave 5 has yet to complete. And our long-term target remains at 40,000. The Dow's weekly Elliott wave count has completed wave 1 and 2 of its intermediate phase, with its ongoing wave 3 incomplete based on the Fibonacci expansion of wave 1 to 2. The target may well hit beyond 40,000 once 36,373 is broken. Bullish flag is confirmed after 20th August intraday rebound near its support at 35,050. On the Dow theory, September will be a crucial correction as the diverging movement between the Dow Jones Industrial Average and the Dow Jones Transportation Index is causing for concern. Despite Dow Jones Transportation rebounding from 14,000 level, the secondary short-term trend remains on the downside. With a lagging signal, it may cause a larger correction going forward. That's all for Phillip's Capital Market Watch. Do remember to like and follow us on social media and subscribe to us on YouTube. Also share with us your views Will the bear return with a punch or the market will stay within a range? Leave your comments and thanks for joining us and see you soon.